Hi, this is Randy Finney with Right Side of the Chart, and this is a late session update for Monday, September 19th, 2022. It is 3:28 p.m. as I'm starting the video, so there'll be enough time to get it out to you, and I'll keep it short to make sure it comes out to you before the close. Just going to reiterate what I've been saying. The near-term charts are, as constructive as they've been in a while. They're as constructive as they've been since right here. We have comparable divergences. These are actually they're even bigger, really, because you had this was our first divergent low. That was the first rally off, and then we had another divergent low, much bigger rally, and you can see the divergence lines there. And then I have one that stems from that. So this is all this new low right here. We had this smaller divergent low right here. But then if you extend the line out, that's about an equal low in the PPO, slightly higher low in the RSI. And so really that divergence carries through here. Let me do this. Let me show it to you 3 months out. That's zoomed in real tight on a 1 month. So like I said, it goes against my grain to get too bearish. I thought we'd see, and we did. Don't get me wrong. We saw a lot of selling into up and through last week. Remember, the FOMC meeting is this week. But that's it. So maybe that's enough for now. Look, I do still suspect, this rally is going to get checked at some point soon. But right now, I'm doing the video because we took out those levels. I'm going to go back. We broke out. We put in the divergent low. We've been building around here. We have a little, looks like a W pattern. And if we didn't have an FOMC meeting, I'd be, pretty aggressively long. I've just been day trading off the 5 and 10 minute charts with a long bias. That means, what does that mean? Well, it means, preference to trade buy pullbacks to support and or buy breakouts above resistance. So here's a breakout of a pretty key level. It's the level I covered in the videos before. That's 3,900. Rounded off, it says 38.9977 there. So that's 3,900 right there. It's the bottom of this consolidation range. We broke out of both these downtrend lines, and we've now taken out the previous reaction low. So that should open the door to that 39.36. Maybe by the end of today, that'd be a great place for an active trader to book some profits if you're betting if you're long right now, regardless of where you took it. And maybe before the meeting, I don't know. That's the next well-defined resistance level, 39.80. But like I said, I think there'll be some selling most likely before then, but you really never know, because if there are more shorts right now in the market that are scared and nervous that want to close their positions. But like I said, I think the FOMC meeting, I believe it's going to be a win-win for the bulls, because I think the Fed, Powell was about as hawkish as he's ever been at that Jackson Hole meeting a few weeks back. And the 75 basis points baked in the cake. I doubt they're going to do a full percentage point. And I really haven't even checked the odds yet. You can check that with the federal funds futures. They show you the probability of the rate hikes. So all I'm trying to say is that I see pretty much most likely any surprises are most likely going to come to the upside for the markets. Like I said, I suspect the Fed may indicate, whether they say it directly or just don't come out, maybe they're just a little less hawkish in their rhetoric, or they might mention something about forward-looking indicators such as mortgage rates, the housing market, things like that. Usually they go by the economic data as it comes out. And I told you, by the time it comes out, it's usually stale and dated. It's at least a month old, depending on what report they're going off of. And, in this fast-moving market, I've been successful in trying to look at these indicators, commodity prices and mortgage rates and things like that, to predict what's going to happen before it actually happens. You can, pretty much no brainer when rates go from 2.5 to over 6% in a matter of 6 months. That's going to cool the brakes on the housing market, right? And when we see crude oil prices drop 20-30%, natural gas comes down, whatever it is, 15-20%. Pretty safe bet to say that there was an abatement in inflation in that month. You don't have to wait for those monthly CPI numbers to come out. So, anywho, for charts are the charts, and we broke out, and there it is. They're buying it, and a big divergent low, and that's ES, by the way, the 60-minute charts of ES, and then NQ, of course. Let me cue that up for you here. NQ. Same thing, 60-minute chart, 1 month of price history. There's our previous reaction low. That's the level 11,990, and it's been taken out. Boom. There's your next resistance, next slash target, about 12,090, and maybe a little late session profit taken, or maybe a little late session covering. All I can tell you is that's bullish until unless it fails clearly, and especially if these divergences somehow get taken out. So that's it. We're heading into Fed week, so you expect some choppiness and expect whipsaws too. That's the other thing. Fed weeks, I need to mention, breakouts have a much higher failure rate when they occur right in front of an FOMC meeting. So, don't be adverse to taking quick profits or standing aside if you're not an active trader and that's not your thing. Just wait for the dust to settle. And then you look at things too, like I've covered before, the FANGs all had divergence building. Here's Apple. I'll just change the line. There's our 60-minute chart. We still have positive divergence on Apple, the top component of the NASDAQ 100. And remember that we had a divergent low here as well. Or no, here, right there. And I gave you 2 targets, 1, 2, both hit. And an even bigger divergent low. So, I don't know. Like I said, 60-minute charts are looking constructive. The weekly chart's not so hot. So what does that mean? Maybe a little more near-term upside. Yeah, we'll see. All right. I could go on and on, show you a lot of other top components in the indexes. Most importantly, the indexes themselves all have, here's SPY, 60-minute chart, all have that positive divergence, fell to support. There was that SPY falling right to that 381 support level. But then look, a lot of resistance overhead. You have the resistance zone right here we're approaching now, and then a back test of that trend line if it goes up any higher. So actually, I'm going to stop the video. Okay, that's it. That must be at least my, gosh, 6th, 7th trade today on NQ, long short. Batting 1,000 on it today. And I just, like I said, I saw that resistance on SPY. I don't think they're going to rip this breakout into the close. I think it'll get sold into maybe a back test of the level here. There's our SPY chart. There was that resistance right there. And QQQ. Same thing coming up on the first resistance level here on the 60-minute chart. You know what? I'm going to move that line because it needs to be moved. I'm going to pull it right down to here. Why did I do that? Well, you had a reaction low right here, that bottom of that candle, and then you have these candles right there. That's just where the line, in my opinion, fits best. So that's probably it. Boom. We get a little pullback. And we'll see. We'll pick it up tomorrow. Like I said, just no reason to go home heavy, long, or short. And if you're not an active trader, and certainly it's not for most people, then just kind of maybe wait till the dust settles after the FOMC meeting. All right, everything else still looking good. Natural gas, still a little potential bounce trade today. It went up. Told you the first resistance was, and we were there at the time, that 7.777. We had a little overshoot. They consolidate around it all day. And if we can pop up here, that would be, that minimum bounce target or ideal bounce target zone there. And that's it. I want to get the video out to you guys. I went over everything else today. Crude, natural gas. So we'll see. Like I said, there's going to be volatility, certainly with the dollar and the euro come Wednesday, and maybe even leading up to there. So let's just keep an eye on things. And like I said, right now, you just have to, you can't ignore on just about any security these 60-minute divergent lows. With positive divergence, they're good for usually counter trend bounces. But then bigger picture, things like this. And I know it's confusing to some. I can be bullish. One day I'm talking how bearish I am on natural gas or crude oil. The next day I tell you I'm reverse. I went long. Why'd you do that? Well, again, it's time frames. If natural gas plays out, it hits my 646, 543 target and uptrend line, which I still think it will. It's not always going to go straight there. Sometimes you have a pretty good drop, but even these counter trend rallies like that to that, just to measure it out. I'm going to do that right now for you, and then I'll wrap the video up. That was a 16, almost 16% little blip right there. Who wants to ride out a 16% kickback if there's a pretty good chance you're going to get one? And then it formed a little bear flag, and then you get in and you get back short the bear flag, add to it, let it play out. Et cetera, et cetera, et cetera. So that's all we're doing here is playing a little bounce off that 750 support, which was outlined in advance. It's this line right here. And then once that rally is bounce has run its course, or most likely, Start scaling out of those longs, or a hard scale out in reverse and back into the shorts for the next leg down. That's how it works. And then we'll watch this too. Remember, whatever the Fed does is going to move the markets, it's going to move equities, it's going to move currencies, and it's likely to move commodities. And then the theme I've been working off of here is if we get a sharp drop or another leg down, a strong leg down in crude and natural gas, that should be net bullish for equities because it allows the Fed to back off a little bit with that abatement in inflationary forces. All right, I'm going to wrap it up here, get the video out to you guys. This has been Randy Finney with Right Side of the Chart. Have a great day.